we could add to the position. I like it when the market expands on the base. Okay, the Japanese say ice 3 feet deep doesn't form in one day. And something like this is absolutely great because you're expanding on the base. And when that happens, once the market goes, it could really get going. And what's nice also about expanding on the base, you have a very important support area. So for momentum players, if we're expanding on the base here and the market closes under the hammer's low, that's the time to go short. For those who are playing the candles as reversals, as long as the hammer holds the support and expanding on the base there, I'd be adding to long positions. Okay, the if-then system. We're spelling out discipline. Again, it may not be in order. The first two we happen to be DI, but we're doing that, but they're not all going to be in order. If-then. That means if the market does such and such, then we react accordingly, if-then. So if the market breaks support, then we think about selling short, like the prior slide, right? If the market breaks resistance, then we could think about going long. If the market stalls at resistance, then we could think about selling short. One of the major mistakes many traders do is anticipate. So let's say we have a very important support area, and the market is holding support, but there's no bullish candlestick signals yet. Some people may say, hey, I'm going to be buying on the support, thinking it's going to hold, but we really have no confirmation. And very often in that case, if there's no turning signals with the candles, the markets will break support. Once again, it becomes a trade-off between profit potential and risk. Let's say the market, let's do it the other side. Let's say the market's moving up and it's getting to a resistance area, and you're thinking it's going to break through the resistance area. You don't know until it's done that it's going to break through resistance. The market's at resistance, no signs yet of either, let's say bearish candlestick signals. The market's let me backstep here. Let's say the market's at getting to a resistance area. It's moving up. Now, do we know if it's going to break support or, in this case, resistance? Do we know the market's going to break resistance? No. Let's say you feel it's going to break resistance. So you're going long before it breaks the resistance area. If you're right, you have more profit potential, correct? But what about the odds of the trade working? Less, because the market has not yet broken the resistance. If we wait for the market to break resistance, the odds of the trade working are much higher. We do have less profit potential. I prefer the latter scenario. I'd rather have the market break resistance to let the market tell me the bulls are really in control. So the way I would look at it, if the market breaks resistance, then we can go long. Okay. If it breaks support, we can think about selling. This is really what momentum trading is all about. Okay, here we have a hammer and a bullish engulfing pattern. How about from a risk-reward perspective? What do you think? Looks great. Looks excellent. Looks fine. Okay. If you do a trade and it doesn't work out within a certain amount of time, then get out. It's called a time. We're going to look a little bit at stops later on. I talk a lot more about stops in my advanced DVD, but we'll talk a little about it today. It's called a time stop. You don't want to commit capital to a trade that's not working out. So here we have the bullish engulfing pattern, and it's just meandering. This is an intraday chart, but I don't know if it's days or whatever this period is. But this is a trade I would not want to stay in. The general idea with the if-then also, if you do a trade and it doesn't work out, then get out. Whether that means a time stop if it doesn't work out within a certain amount of time, or if you're buying, let's say you're buying on the bullish engulfing pattern, and then you're looking for a particular target, and it gets maybe within a few ticks of it and then starts pulling back. Keep in mind, a support and resistance area are not exact. A lot of people forget about that. So even if you get to within a few ticks of support or resistance, you could think about getting out of the position. But the general precept, if the market does something, then we react according to what the market is telling us. What's that?
Doesn't this look like a continuation pattern?
Okay, the question is, doesn't this look like a continuation pattern? So after the bullish engulfing pattern, the market moves sideways. And once it breaks that sideways moving action, we've broken out of a horizontal trading band. Okay, then we can think about going short. Very often when the market's in a consolidation band, and this is another reason you should be out of the position with that bullish engulfing pattern if the market isn't moving, it doesn't move up soon, because if you have a downtrend and the market starts moving sideways, theoretically, they've done studies, this is years ago, I don't know if they've updated them, and this is in the equity side, I don't know about, I don't think they ever did this in the Forex side, but the odds favor a breakout in the direction that the market had before the lateral band. So in other words, what was the direction between before the box range? After that bullish engulfing pattern, what was the, when the market moved in the box range, what was the prior direction? Down. The odds slightly favor a downside breakout, yes. So that's
can I say that the risk and rewards, the resistance, that area is only for entry level. Once you're in a ticket position, you can really ignore that the risk reward area. Resistance was a area. Once you are in a position, and then you should look for a time frame, how long you want to stay in a position. Right.
The question, he's bringing a great point, that when you have the position, you're looking at the risk reward when you first put on the position, but we should be thinking about a time frame also. How long are we going to give to get to that target? Right, exactly.
They repeat themselves over and over. So you can do back testing. Is that true with the Forex? Can you look at the pairs and say they react this way?
The question is, can you test the candles, essentially, in the Forex market? And the only way I would suggest doing that is using them in addition to what you normally do. I would never say buy on every bullish engulfing pattern. Okay? Why? You have to define the risk reward. You also should look if the bullish engulfing pattern or the hammer is confirming another support area. So this is, again, the biggest misuse of candles. And those who try to backtest it don't do it right. I've seen articles in Stocks and Commodities magazine. The candles work really bad. They work really well. It depends on the testing. It doesn't matter. They're not testing them right. Trading with candles in isolation is, like the Japanese say, like leaning a ladder against the clouds. Okay, there's nothing substantial. You can't just use the candles. You have to think about risk, reward, money management. The triad we'll look at later. Candles, Western signals, and money management. Candles is just one leg. Yes? Mm-hmm.
Isn't that the risk reward actually pretty good if you look at it?
Oh, yeah. Oh, yeah, the hammer and the bullish engulfing pattern is a great risk reward. I would be doing this trade. The point is that when it was by trading sideways for such a long time, I wouldn't be committing capital. I wouldn't keep the capital in there.
So at that point, since you have the bullish engulfing and you have the hammer, why wouldn't you make the entry right there?
I would.
You would.
I would. Right. There's also something called a time stop. If the market just meanders, your capital is being committed there. There's other markets you could probably much better better risk rewards, much better trading opportunities. You don't want to tie your money up on a market that's doing nothing here.
Much downtrend.
Mm-hmm.
Do you think that candle pattern confirms a shift in psychology?
Okay, because the market is in such a big downtrend, does these candle signals show a shift in psychology? One thing I would do is, getting back to her question about a daily chart, I would see if this hammer or an engulfing pattern is confirming a support area in the daily chart. Okay, we'll look at later, for those who trade intraday, take a daily chart support or resistance and throw it onto an intraday chart. And then if you get a candlestick signal confirming that daily support or resistance, to think about pulling the trigger. But my feeling is, because you had both a hammer and a bullish engulfing pattern, one confirming the other, then I would go long. If it was just a hammer, probably not. And we're actually looking now at money management strategies, the basics of money management. And when we look at the risk reward, obviously one aspect of the risk reward is, if we're defining the risk, we're defining our stops. So we always need to use stops. A question I was asked is, with the Forex survey, is how do you deal with false signals? Stops, right? You don't know it's false until the market tells you it's false. Okay. There's always a price that says